Hello everyone, I'm Asiya Umarova and today I will explain you 11th chapter about audit procedures and sampling. So first of all, let's look at the lecture content. In this chapter, we will look over the topics such as substantive procedures, accounting estimates, audit sampling, computer-assisted audit techniques, and using the work of others. So here, what is a substantive procedures? It is a test to obtain audit evidence to detect material misstatements in the financial statements. There are two types of it. First of all is analytical procedures and second is tests of detail of transactions, account balances and disclosures. So here the types of the substantive tests carried out to obtain evidence about various financial statements, assertions are outlined in this table. So, for example, here is the audit assertion completeness. The type of the assertion is classes of transactions and related disclosures, account balances and related disclosures, and the typical audit test is review of post-year-end items, cut-off testing, analytical review, confirmation, and reconciliations to control accounts. So here we can see that there is also rights and obligations, accuracy, valuation and allocation, existence. In the next page, occurrence, accuracy, classification and cut-off. So let's look back. Here in the second row, it is written the type of the assertions, and in the third row, written typical audit tests for each of these assertions. Each of these audit assertions. So here is a model for drawing up an audit plan in this following list, and here is agree opening balances with previous year's working papers, review general ledger for unusual records, agree client schedules to or from accounting records to ensure completeness, carrying out analytical review, and test transactions in detail, test balances in detail, and review presentation disclosures in accounts. Okay, so substantive procedures can be stated to fall into two categories. First of it is test to discover errors, and second is test to discover omissions. What is a test designed to discover errors? This test will start with the accounting records in which the transactions are recorded to supporting documents or other evidence. Such tests should detect any overstatement and also any understatement through causes other than omission. For example, if a test is designed to ensure that sales are priced correctly, it will begin with a sales invoice selected from the sales ledger. Price will then be checked to the official price list. And in the second one, test designed to discover omissions. These tests must start from outside the accounting records and then matched back to those records. Understatements through omission will never be revealed by starting with the account itself, as there is clearly no chance of selecting items that have been omitted from the account. For example, if a test is designed to discover whether all raw materials purchased have been properly processed, it will start with goods received notes to be agreed to the inventory records of purchase ledger. So here is the accounting estimates. When auditing accounting estimates, auditors, in order to assess whether the estimates are reasonable, should test the management process, use an independent estimate, and review subsequent events. Here is the key terms about the accounting estimate, about this. So here is accounting estimates. It is the approximation of a monetary amount in the absence of a precise means of measurement. Estimation uncertainty is a susceptibility of an accounting estimate and related disclosures to an inherent lack of precision in its measurement. Management's point estimate is the amount selected by management for recognition or disclosure in the financial statements as an accounting estimate. And the auditor's point estimate or auditor's range means the amount or range of amounts respectively derived from audit evidence for use in evaluating management's point estimate. So here is examples of accounting estimates like allowance for doubtful accounts, inventory obsolescence, warranty obligations, depreciation method or asset useful life, outcome of long-term contracts, costs arising from litigation, settlements and judgments, provision against the carrying amount of an investment where there is uncertainty regarding its recoverability. Next one is audit sampling. Audit sampling is the application of an audit procedures to less than 100% of items within a population of audit relevance such that all sampling units have a chance of selection in order to provide the auditor with the reasonable basis on which to draw conclusions about the entire population. The population is the entire set of data from which a sample is selected and about which the auditor wishes to draw conclusions. And here is the case stages in the sampling process. First of all is determining objectives and characteristics of the population, determining sample size, choosing method of sample selection, projecting errors and evaluating the results. ISA 500 introduces 3 methods of selecting items for testing. First of all is testing 100% of items in a population. Second one is testing all items with a certain characteristic as selection is not representative. And the third one is audit sampling. So here is we can say that auditors may select certain items from a population because of specific characteristics they possess. The results of items selected cannot be projected onto the whole population, but they may be used in conjunction with other audit evidence concerning the rest of the population. And here auditors should or must focus on high value or K items. The auditor may select high value items or items that appear suspicious, unusual, or prone to error. And the second one is all items of a certain amount. Selecting items this way may mean a large proportion of the population can be verified by testing a few items. Third one is items to obtain information. This could be information about the client's business, the nature of transactions, or the client's accounting and control systems. And the last one is items to test procedures. This is to say whether the particular procedures are being performed. And here, audit sampling can be done using statistical sampling and non-statistical sampling. Statistical sampling is an approach to sampling that has the following characteristics like random selection of the sample items, the use of probabilities theory to evaluate sample results including measurement of sampling risk. And in non-statistical sampling methods, sampling approach that doesn't have these characteristics in this method. So next one is design of the sample. Sampling risk. It is the risk that the auditor's conclusion based on a sample may be different from the conclusion that will be reached if the entire population were subjected to the same audit procedure. Non-sampling risk. It is the risk that the auditor reaches an erroneous conclusion for any reason not related to sampling risk. For example, like the use of inappropriate audit procedures or misinterpretation of audit evidence and the failure to recognize a misstatement or deviation. Sampling unit is these individual items constituting a population. It may be a physical item or a monetary unit. And the stratification is the process of dividing a population into subpopulation, each of which is a group of sampling units which have similar characteristics, often monetary value. Here, the main methods of selecting samples. Okay, I will not read all of them. So first one is random selection. that ensures that all items in the population have an equal chance of selection, random selection. Systematic selection involves selecting items using a constant interval between selections, the first interval having a random start. Haphazard selection may be an alternative to random selection provided auditors are satisfied that the sample is representative of the entire population. These three are the main methods of selecting samples, and these two are others like mandatory unit sampling is a type of a value-weighted selection in which sample size selection and evaluation result in a conclusion in mandatory amounts. Block selection may be used to check whether the certain items have particular characteristics. Okay. Projection of misstatements. For test of details, the auditor will project misstatements found in the sample onto the population to obtain a broad view of scale of the misstatement. And the ISA 530 states that for test of controls, no explicit projection of errors is necessary because the sample deviation rate is also the projected deviation rate for the population as a whole. And the last one is evaluating the results, like in this topic. The auditor must also evaluate whether the use of sampling has provided reasonable basis for conclusions about the population from which the sample was drawn. If the conclusion is that sampling has not provided this, the auditor may request management to investigate misstatements that have been identified and make any necessary adjustments or tailor the nature, timing, and extent of further audit procedures to best achieve the assurance required. The next topic is computer-assisted audit techniques. Computer-assisted audit techniques, or in short CAATs, are applications of auditing procedures using the computer as an audit tool. CAATs may be used in performing various auditing procedures like test of details of transactions and balances, analytical review procedures, test of computer information system controls. And here I stated the main advantages of using CAATs and the disadvantages of using CAATs. Okay, the first advantage of it is auditors can test program controls as well as general internal controls associated with computers. And the second one is auditors can test a greater number of items more quickly, accurately, without any mistakes than will be the case otherwise. Auditors can test transactions rather than paper records of transactions that could be incorrect, and the CAATs are cost-effective in the long term if the client doesn't change its systems. Here is disadvantages. Setting up the software needed for CAATs can be time-consuming and expensive. Audit staff will need to be trained so they have a sufficient level of IT knowledge to apply CAATs. Not all client systems will be compatible with the software used with CAATs, and there is a risk that live client data is corrupted and lost during the use of CAATs. So here is the major steps to be undertaken by the auditors in the application of a CAAT. Sets the objective of the CAAT application, determines the content and accessibility of the entity's files, define the transactions types to be tested, define the procedures to be performed on the data, define the output requirements, identify the audit and the computer personnel who may participate in the design and application of CAAT. Refine the estimates of costs and benefits, ensure that the use of the CAAT is properly controlled and documented, arrange the administrative activities, including the necessary skills and the computer facilities, execute the CAAT application, and evaluate the results. In CAAT, there are two types of it, audit software and test data. Here is the definition for the audit software, and here is the definition for test data. Audit software consists of computer programs used by the auditors as part of their auditing procedures to process data of audit significance from the entity's accounting system. It may consist of generalized audit software or custom audit software. Audit software is used for substantive procedures. Test data techniques are used in conducting audit procedures by entering data into an entity's computer system and comparing the results obtained with predetermined results. Test data is used for test of controls. So the last topic is about using the work of others. External auditors may make use of the work of others like auditors experts, internal auditors, service organizations, and the auditors when carrying out an audit procedures. An auditor's expert is an individual or organization possessing expertise in a field other than auditing or accounting, whose work in that field is used by the auditor to assist the auditor in obtaining sufficient appropriate audit evidence. Management expert is an individual or organization possessing expertise in a field other than accounting or auditing, whose work in that field is used by the entities to assist the entity in preparing the financial statements. So these two is definitions of these auditor experts and management experts. And the ISA 620 requires the auditor to evaluate whether the auditor's expert has the necessary competence, capabilities, and objectivity. Information on these areas may come from the following sources like personal experience, discussions with experts, discussions with other people, qualifications, membership of a professional body or industry, association, license to practice, like published papers or books, quality control policies and procedures. What is the internal audit? Internal audit function is defined in the ISAs as a function of an entity that performs assurance and consulting activities designed to evaluate and improve the effectiveness of the entity's governance, risk management, and the internal control processes. Direct assistance refers to the use of internal auditors to perform audit procedures under the direction, supervision, or review of the external audit. So in this criteria, the following criteria must first be considered by the external auditors when determining whether the work of the internal audit function can be used. Like here are the main criteria of it, like the extent to which its objectivity is supported by its organizational status, relevant policies and procedures, the level of competence of the function, whether the internal audit function applies a systematic and disciplined approach. And here are the relevant considerations for each of them. If the internal audit function is found to be lacking in any of the preceding areas, ISA 610 states that the auditor shall not use the work of the internal auditor. So, next one is the service organization. Service organization provides services to user entities. There may be special considerations for the auditor of a user entity when that entity makes use of a service organization. Like here is I wrote the definitions for like key terms. Like service organization is a third-party organization that provides services to user entities that are part of those entities' information systems relevant to financial reporting. User entity is the entity that uses a service organizations and whose financial statements are being audited. User auditor and auditor who audits and reports on the financial statements of a user entity. Service auditor and auditor who, at the request of the service organization, provides an assurance report on the controls of service organization. So that's all. I think I explained everything well and clearly, and just in case I will send you the main slide that I did. Thank you for listening to me.